Guys, how we doing? So I'm going to jump on here and do, sorry, cameras up here, and do a video that Andreas asked for yesterday. It is actually, there are explanations of this in this one here. Swing trade education, right? I think it's, must be up here. There we go. Lessons on areas of value, entry points, support resistance, entry techniques, blah, blah, blah. So it's up here, right? However, I will do one here because maybe on that one that I just showed you, it might just be based on, what do you call it, like the weekly and daily time frames, but you can do this on every fucking time frame. Now the crazy thing is, look at gold, right? I mean, look, if we zoom out of this, it's done fuck all. Look at that, you know? It only looks like it's done something when we go at that with the screen. Do you know what I mean? Oh, look, it's fucking melting. It isn't fucking melting at all. And the crazy thing is Lee pointed out, it's like 700 point fucking moves. You know what I mean? Look, like yesterday, I traded this from here. You saw it. I got in here. I think you guys got in here, took the scalp down. I got in the minute this blue. Wait, I'll zoom in. The minute this blue candle closed, I instantly entered the trade. So it closed here. I entered the trade here. It then came down. Right, I was in a little bit of profit. Then it went like that, and it came back up. Right, and I was in drawdown. And I just left it. My stop loss was above. My stop loss was above here. In fact, I'll just put it in. My stop loss was here, right? Just to give it that bit of space. In fact, I don't think it was that high. Sorry, I think it was about. It was about here. It was about an inch above that. And it came back up. It was a little bit of drawdown, and then it just went fuck off, fuck off, fuck off. As this came back up, it had stopped me out here, which is fine. And I didn't re-enter, of course. But look, on the 30-minute time frame, you know, especially if you're scalping, it's absolutely fine, you know, to do that. But when I look, if you think how many pips was that, I mean, that was a great trade yesterday, right? And look at the size of it. Go on the 4-hour time frame, and I literally traded that. That's what I traded. Now, when you look at that, it's probably up here to here. But when you look at that, how fucking pathetic is that of a trade? Do you know what I mean? It is fucking pathetic. But because it's gold, you get a huge amount of, pips. This is really the stuff that I'm looking for in my method, guys. On the higher time frames, this, you know, a trend. Not even this. I'm not even looking for that, to be honest. I'm looking for a trend, whether it's up or down. I don't care. But, you know, a significant trend upwards. So now I'm going to show you, like when I was doing this on you can do it on any time frame, right? So I'm going to jump through any time frame. It's dead simple. You're looking for an area of value, right? Which is denoted by the likes of the Fibonacci retracement. So the Fibonacci retracement would be like this. Hold on. Oh, there, sorry. You go from the high to the low. So before this is played out, you're obviously down here, right? So let's go from this high to the low. And we're looking for an area of value, okay? So these numbers here at the side of the Fibonacci are showing you value. 0382 is really dog shit value, and I just never take trades from it. Yes, sometimes the market will come down, it will come back, retest the 382, and it will start melting. I just don't take it, because more often than not, it will give a deeper retest. Why? Because it's really shit value, and if traders buy it there, they're not getting a good deal at all. So when I say traders, I'm talking about the big bankers, the real fucking, you know, creme de la creme traders, not just you and I fucking trading 20p, you know what I mean? So there's no value there. Okay value is the 500. Good value is the 618. I would take a trade from there. Great value is the 786. And fantastic value is anything above the 786. It very rarely comes above it though. But it very often hits the 618 and the 786. Okay? So first of all, if you've got a thing like this, replay. I'm going to do it there. Okay. So, in order to use the Fibonacci, you need a high and you need a low, right? Now, obviously, the previous high is here, and you know, you can drag this up, but I'm going to show you. You would normally put it at the last high, okay? So you've got a previous high here. What I normally do is I take it from the last high. So you've got a high here, right? And you've got a resistance. You've got a new support. You've got a new resistance formed. And then it breaks down. You've got a new support. break, resistance, support, resistance, support. And now it's ended, and now it's giving you that kind of pattern as if it's a reversal, right? It's coming back up. So now you take it from the last previous high down to the previous low, and it's about to give you that big reversal, you know, from the, you could say, the demand to the supply. So within this area here, we're looking to take sales, right? In our mind, we're looking to take sales. So you're looking for a good area of value to enter a sell. So here, we've established this is shit. If it comes back up to here and rejects, I'm not going to trade it. This is based on my method. This is not scalping, right? Scalping, you could take it, yeah. But, you know, based on the longevity stuff and how I'd base my entries, I'm not going to take that. If it came back up here to the 500, I could potentially take it. However, what do we not have in this area of the 500? We don't have the small candle, large engulfing. Look, small candle, large engulfing. You could argue that that's it, small candle, large engulfing, but it's not really. It hasn't engulfed the pin. You see that? And then this one obviously is too late. So you've got small candle, large engulfing, right? So, and then this small candle, and with a large engulfing, that shows volume. The large, why is that important? The large engulfing shows where volume kicked into the market. How do you know that? Because it's fucking right there. That candle, absolutely flying, is volume being pumped into the market. That's why it's so big, right? So, we're looking for a small candle, large engulfing. If we have a small candle, large engulfing in the 382, we just ignore it. It's shit. If we have a small candle, large engulfing in the 618 or the 786, we want that. That's fantastic. So we mark it up. So let's have a look. Oh, yes, we've got one here. Small candle, large engulfing. We draw it across. Do we have one here in the 786 area? Oh, bosh. There it is, right there. Boom, boom, boom. I love this. This is actually one of my favourite patterns, these three candles. 1, 2, 3. It normally means it's going to continue. But what we want to focus on is a small candle, large engulfing, because that's where the volume kicked in. It gave you the pullback, and then that's where the volume kicked in, right? So we're going to mark that up as well. Mark up the small candle. Boom. Now, it's as simple as this. All I'm looking for now is if this market comes back, hits here, and rejects, or hits here and rejects, I'm going to enter that market. I'm going to enter it because it's great fucking value, and it's hit my zone. Now, let's play. Right, look. So obviously that's a bit of a rapid. I've speeded it up a little bit by 3 times, but look. Boom. What's it done here? Let's now analyse what it's done, right? Look. It's came up to this previous zone, right? What's it done right there? It's gave you a liquidity grab, or as Lee would call it, the fake out strategy, right? It's the same thing. It's gave you a liquidity grab here. Why? Because if most people have entered it here, because this actually moved quite slow in real time, so if most people have entered it here, they've got their stop loss above the previous highs, haven't they? So that's liquidity. Where people put their stop losses is a big bucket of liquidity. So it's came up, fuck off, it's hit all the liquidity. What else has it done here? The previous support, once broken, becomes the new resistance. Oh, sorry. Right? So not only do we have that as confirmation, previous support, once broken, becomes the new resistance. So that's again how we could potentially favour this area here, the 618, over the 786, because it's more highly likely that it's going to come up and retest this zone. Why? Because in the 786, it's good value. We've got this here, small candle, large engulfing with a volume kicked in. And we've then got here, we've got the previous support, which was broken. It became the new resistance twice over. Failed to break it here. Came back up. Liquidity grab, because everyone's got stop losses behind here. And away we go. Your entry, if you want to take a rapid entry, then the minute it hits here, you could enter here with, I would recommend your stop loss actually above here, this previous high, because it might go at bang, could hit that area as well, right? So you don't want to be putting your stop loss just above here in that area that you would enter a sell from, because then you're telling yourself, well, it's got a potential to actually pull back up, hit here, and then drop, right? So you want to be putting your stop zone in a safe zone away from your potential entry areas. You know, there's nothing there to enter from. Do you know what I mean? So you could either take the early entry as soon as this comes up, just go bang and enter it. I wouldn't recommend that because it's risky, but we are on the 30-minute time frame. You can just wait for a 30-minute candle close, and then once that candle closes, you enter the trade, your stop loss above here, fucking away you go. Bish, bash, bosh. And that is it. you're fucking gone, right? If we look down here, what is this down here? Small candle, large engulfing, showing volume. Let's see what happens next. Oh, look at that. What a fucking coincidence. It just came straight back down to the area, small candle, large engulfing, and away it fucking goes. What a huge coincidence. Let's done it again. It happens in any time frame, guys. I'm telling you. Look, it's done it again. Breaks away, small candle, large engulfing, volume comes up, small candle, large engulfing, fails to break that, comes up for the retest, candle down, market up, pin as well, boom, comes up, boosh, bash, bosh, 30-minute close, you can enter that, and away you go. You know, it's fucking that easy, and it happens in every single time frame, guys. I swear to God. Wait, I'll just go back a little bit so I can clear some of this. Right, don't know why it's not. Okay. Right. Let's go down to the 5 minute. Right, hold on. Fucking hell, I need to clear all this, don't I? In fact, let's go into another one because I don't want to. In fact, fuck it. I will just do it. Right. Five-minute time frame. Small candle, large engulfing. I wouldn't be trading that. I'd be waiting for the retest. I always say to myself, no retest, no entry, right? Small candle, large engulfing. Wait for the pull back, break away, 5-minute close. 1, 2, 3, 4. Fucking happy days. Unreal. Small candle, large engulfing. Also in an area which is a previous support. That support is now broken. When that support is broken, it becomes the what? It becomes the new resistance. Every time frame, guys, it does it, I swear. Let's have a look. What have we got? Small candle, large engulfing. So, right, here's a good example. What you're waiting for here is you mark this small candle up, drag it across, right? So when you're initially here and you draw this up, you're waiting for the market to come down to this zone, retest, reject, and then go, right? So this is obviously a liquidity grab. That's all that is. You can see the base here, right? These are the main bases. That's an extended, so that's a liquidity grab. Now, all you're waiting for is the market at this point is to come down, retest, reject, go, retest, reject, go, right? Now, when it doesn't do that and it finally does this here, and it breaks through there, like you've seen, this previous support is now broken. And it then becomes what? It then becomes the new resistance. Boom. So what are you doing at this point? You're still going to trade it. You're just simply waiting for it to come back up. You don't have to change your box. The box is exactly the same. But now that it's broken that box, you're now waiting for it to come back up, retest this box, reject, enter, and away you go. That is it. And it's the same. You're looking for that continuously until such time where it does the opposite. It breaks through again. Boom, 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 boom. And it starts going off. That's it. Every fucking time frame, guys, this happens on. I swear to God. I'll show you one more. Let's go to the weekly. Or let's see, the weekly or the daily. I prefer trading from the weekly because you enter one trade and you can just fucking leave it and leave it and leave it. Okay, I'll show you in the weekly, right? But it's the same. It might be harder because it's obviously a longer time frame. There we go. There it is right there. I've already marked that up. Look, small candle, large engulfing. It's engulfing this candle. Drag it back across. Candle formation breaks away. We're just waiting for that retest. We're not trading any of this. Excuse me. Comes back, retest that zone. Bang. Now you can take the instant trade the minute it hits that zone. Once you become super confident in the strategy, that's what I've been doing a lot of the time now on scalps on gold. I've just been fucking bang entering, as you saw my entry yesterday, because I'm just like fucking get in there. However, obviously the best way is to come back to this zone and just, you don't want to wait for a week to close, right? But here's the point: if you waited 1 week, you could still enter that, and look, it runs for fucking months. Do you see what I'm saying? But you don't. Obviously, you could come down to the weekly time frame. The daily time frame, or even the 4 hour. There it is. There, look, comes back, retest that zone on daily. If you wait for a daily close, you've got, look, comes back, retest that zone, small candle, large engulfing, enter, stop loss behind here, and away you go. And you look, small candle, larger engulfing. Let's just mark this up. Hold on. Right, small candle, large engulfing, area of volume. Right, and this here. Let's just mark this up. This is the previous support, previous resistance. Sorry, bang. So you can mark up both if you wish. Or you can drag that up if you want to show you both, but I just like to do two independently. So you've got this area of volume, because you're going to mark that up because you think it's going to come here, reject and melt initially, right? But when it doesn't do that, it breaks above, previous resistance is broken, it then becomes the new support. Candle close, in you go. Small candle, large engulfing. You can even do it here. Look, small candle, large engulfing, drag it across. Small candle, large engulfing, drag it across. You're waiting for the market to come here. I'll show you. Hold on. You're waiting for the market to come up here, reject and melt. Now, when it doesn't do that and it breaks through this, you're then stopping because you need to see it retest and break back below here. When it doesn't do that and it continues upwards, the previous resistance, once broken, becomes the new support. And all this extra little bit here it's just the liquidity grab. It's never going to land bang in your box 100% of the time because it's the grab liquidity. It could even come to here and then bang, shoot straight back in, and away you go. There's your entry. All right. It happens on every single asset, guys. It's not just gold. It's anything. It's Bitcoin. In fact, let's just look at Bitcoin. I never touch Bitcoin, but let's see if I've still got all my old marked up areas. Do I? Wait there. Daily. Let's just see. Where did these ones hit previously? Here we go. Look. Bosh. Here's all the previously old areas. Broken through. Comes back, so it's void. Breaks away. Previously, if you want to mark it up, sorry, wait, I'll drag this down. I marked it with the green for the volume, but look, if you want to make your previous support, liquidity grab, away it goes. Once broken, reject, retest, becomes the new resistance. Bang, look. Every time. Small candle, large engulfing, volume kicked in. Mark up the small candle, drag it across, liquidity grab, away we go. Every time, guys, it happens. Small candle, large engulfing, mark up your box. Bang, away we go. Rejects off the 200 EMA, lovely jubbly, and off we go. Honestly, it's fucking amazing. Small candle, large engulfing, mark up your box. Comes back for the retest, rejects, and away you go. Every single time, guys. I'm telling you, it's fucking unbelievable. Just wait for that. You don't see it everywhere, right? But you do see it in loads of places. Loads of places. So, just be aware of it. Small candle. The one that I showed you that I like with the 3 candles, right? Small candle, larger engulfing, breaks away, retest, reject. And that's essentially it, guys. There's nothing else I can show you because it does become that bloody simple. And it works on everything. Gold, copper, oil. Let's have a look at oil. Look. Fucking religious. Boom, 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 boom. If you're someone who watches my weekly fucking videos, you will see that I have marked all of these boxes up before the market comes to it. Andreas watches my videos all the time. He will tell you, I fucking mark it all up. That's why when I'm away in the volcanoes and mountains, etc., and I'm unable to give a trade, Andreas is like, oh yeah, I jumped in your fucking NZD USD, because I give the markups in the video. Here's another one, look. Fucking blinder. This has hit pretty much every single one. Boom. Breakaway. Previous support, once broken, becomes the new resistance. What else have we got here? Small candle, large engulfing. Small candle, large engulfing. Comes back, breaks from that zone, comes back, retests that zone, and away it goes. A new zone is created. Small candle, large engulfing, breaking away. Boom. Previous support, once broken, becomes the new resistance. Right? Small candle, large engulfing. Potentially, I've already marked these up, it could potentially drop from here, or even better still, come from here and melt its way down. That would be fucking fantastic. We do have to be aware that this is an all-time low. So, look, if I go to the weekly time frame, it looks like it here that you can trade it, but look, if we can zoom out, look, it's at an all-time low, right? So we just have to be careful. Yes, we've still got this here to the left where it can come down, absolutely. But I personally wouldn't like to trade it from there. At a minimum, I want to trade it from here. At a minimum, let's see where the volume kicked in. Oh, so I'm going to show you that. Look, see this right here? Fixed range volume profile. All you do is click on that, right? Drag it from the left of the previous high in the big move to currently. Don't fucking drag it way across here. Look, that's where the volume kicked in. So the market might not come all the way up here, but it tells me that this here is a fucking brilliant area. It tells me that if the market... There we go. I'll just put it in the middle. If the market comes up and hits here, that would be a fucking blinding sale. Blinding, because that's where all the volume kicked in. So when the volume kicks into a particular area, you'll find that banker stop losses are the ones are behind that. So when it hits those area where that area where all the volume previously kicked in, they don't want it going any further, and that's where you get the big fuck off, the big massive moves out of nowhere, because they don't want their fucking stop losses being hit. So they get it the fuck out of there and they make it start flying. So there's 3 potential setups here. I'll just extend it. What's that on weekly? Okay, there's 3 potential setups here. Obviously, this one's on the daily or something. But yeah, the best one. I just get rid of that. The best one, you could trade it from here, but the best one is actually from here. If it comes to here, happy fucking days. I won't be buying it because it's a counter trend trade. Remember, obviously, scalping is absolutely fine for trend and counter trend. Doesn't really matter because you're in and out so quickly. It's not relevant. But when you are doing longer term trading, like day trading, swing trading, position trading, and so on, you don't really want to do counter trend trades, because basically if you choose a trade which is a trend trade, right? Trend is your friend. A trade which is in line with the trend. You're choosing a trade which has the highest probability of making you money with the lowest risk, to your account of losing money, the lowest risk of losing money. If you pick a counter trend trade, you're going against the grain, you're going against fundamentals, this, that, the other, you're going against technicals. You're choosing a trade which has the lowest probability of making you money with the highest possible risk. Why the fuck would you do that long term? It doesn't make any sense. It's the complete opposite of the point in trading. You know what I'm saying? So why would you do it? So obviously scalping doesn't matter because you're just getting in here and out here. But if you want to enter here, or you want to enter here and let that fucking run for 4 months, then that's the aim. What else? I think that's pretty much it. It's been a really hard year, guys, to catch any big, long, sustained moves. It's been pretty fucking boring across most currencies. Really shit, boring year. However, you just fucking stick with it, right? And see what we get coming up. So I hope this video was beneficial for you. If you have any other questions, of course, fire away. All right, have a good one.